Japan causing massive deleveraging event. Buffett on defense. Hi, everyone, and welcome to Ainsley Insights, brought to you by Ainsley Bullion, Ainsley Crypto, and the Gold and Silver Standard as the Ainsley Group celebrates 50 years. Today, we welcome back Sam on this day where markets are bouncing all over the place. There's definitely a sense of fear in the air. How are you going today, Sam?
Good, Chris. How are you?
I'm good. I've been absolutely glued to the markets this morning. So Monday morning, the market's opening up. Bitcoin's all over the place. We've got sort of the follow through from what happened on Friday. For people who aren't up to date, can you really probably just step us through that big picture? Because we had that jobs report in the US that came out, seemed to start a bit of an avalanche across various things. Tell us what's been going on.
So the jobs report in the US came out weak, so it was worse than expected. And, it has been a sort of bad news is good news situation.
Mm.
But right after that jobs report, the Federal Reserve's Barkin came out and just completely dismissed it. He said that the numbers were, to quote him, reasonable. So he thinks there's nothing wrong with that. The rest of the market's panicking, thinking that the Fed's already too late. So even if they do something soon, it's already gone. It's over. So there's more happening under the surface as well, and a lot of that is to do with what's been happening over in Japan.
And there's so much to break down there because it's really causing big movements. But just before we get on to Japan, isn't it fascinating how quickly the market has switched from higher for longer, this is just how it's going to be, inflation's an issue, to everyone really hammering the Fed, saying, you're too late, you should have been cutting for ages.
Yeah.
It blows my mind how quickly that turned.
Well, it's getting quite clear that they're holding out and they don't really have reason to hold out. And their talking point was inflation. Now, by their metrics, inflation is fine now. So what's the reason for holding high? Are they trying to crash the markets? That's that's the big question.
So you mentioned the yen. It's dramatic is probably the way you would describe it. The Japanese yen's been moving quite a bit recently, which has caused these wobbles in the market. Seems to be approaching that sort of capitulation level where it's just getting out of control. Can you step us through that angle?
So just to make sure everyone's on the same page, the yen carry trade, or a carry trade, has been a world standard for the last roughly 20 years. So Japan's had really low interest rates, and that makes it really attractive for investors to go to Japan and, borrow at low interest rates and then do investments in countries with high yields. So you could say that a lot of the world's bull markets have been funded by Japan, Japanese money. So what can go wrong with that situation? Well, Japan could finally reach the point where their currency is being devalued to the point where they have a hard time importing what they need. Japan is basically a series of volcanoes. They don't have too many natural resources. All they do is use their intellect and their hard work to make things like automobiles and technological equipment, but they need to import oil. They need to import all these things. And if they can't do that, they need to intervene in the currency and try to strengthen it. And that's what's happened. So Japan has, talked about raising and holding their interest rates higher while the rest of the world's talking about cutting. And what that's done is it's sent the value of the yen through the roof against currencies like the US dollar, against the Australian dollar. And when traders are doing this yen carry trade and they're using massive leverage, we're talking about, when people do currency trading, they're trading with, for example, 200 times leverage.
Yes.
So if a percentage on this side changes, a percentage on that side changes, it can be a big problem, especially if they're borrowing this money, hoping that, for example, US stock market's just going to keep going up, and investors have been pulling out of it.
And I've been talking about this with a friend this morning, just how long that trade has been going on. You mentioned 20 years. When you think about that, I can just imagine there are so many compound effects that build up over time.
Yeah.
It's very hard to actually anticipate what the fallout could be with the unwinding of that trade, because you've probably got a lot of strategies right around the world that are dependent on something that has just worked for such a long period of time. So it's seen as almost a certainty. It's seen as safe money. You basically just take that trade, and people might not even know that they're in that trade. They might be indirectly in the trade
Yeah.
because things layer on top of other things. And I mean, that's what we saw during the GFC when everything sort of ended up being built on top of mortgage-backed securities. It could be a similar situation here, I imagine.
Yeah, so everything is just massive leverage from this carry trading. And then when that rug is pulled out from under these traders, the leverage falls apart. And I mean, you see this a lot in, I guess, new things like, for example, in crypto with something low liquidity, when it's propped up by leverage and you get hundreds of % of increase, and then suddenly the price dips a bit and the traders start capitulating and the market falls. That's not something that usually happens in other markets, but this sort of event can make that happen.
Because it's all interrelated. I can absolutely see
Yeah.
that. Another point I wanted to touch on, you mentioned Warren Buffett here. Now, I believe, and correct me if I'm wrong on this, but I believe he'd been spending a bit of time in Japan recently, sort of talking well before this is unfolded, and I think he's made quite a significant move recently. Is he once again been ahead of the curve on this one?
Well, it looks like he has a bit of a heads up, yeah. But I mean, if you look at it, this is the seventh quarter in a row that Berkshire Hathaway sold more than they bought. Um, I mean, he's recently sold again, quite surprising, 50% of his Apple stake, and their cash reserves are now up to $277 billion. So, look, it is part of the process. And some people are saying, are you surprised Warren Buffett's just, made this move? And I don't think it should be too much of a surprise, because I mean, you look at the Warren Buffett indicator itself, which is pretty much looking at the P/E ratio of, the whole stock market in the whole country. That's his, the Warren Buffett indicator. You don't think he's going to do that for the companies he's in? Of course, he's going to be looking at, companies that are, trading for many times what they're actually worth. So it's not too much of a surprise to me. And then there's also talk about him reducing his share buybacks. Well, traditionally, Warren Buffett has bashed share buybacks. He's even said, and you're probably aware, he said there's no reason for share buybacks. And if a company's doing share buybacks, it's it's not a very good company at all. But since 2020, he's had to kind of quietly join the club because there's just so much free money. You have to stay in the game.
And is the logic, just on that point, is the logic that he would be using there that if you've got that spare money, you should be effectively investing it and expanding your business? So buying back shares isn't really adding any value to anyone. Is that the logic that he's using?
Yeah, I guess it's the traditional logic that you're not adding value. You're just trying to make it look short term, like your company looks good. So it's making appearances at the sacrifice of actually improving the company. And, he's always long term. He's into railroads and industry, not into flash in the pan sort of things. But with essentially every business doing that, you have to join the club or you're not going to appear as successful.
Well, I think we're all going to be glued to the market for the rest of the day and probably the rest of this week. I imagine you don't think there's any sort of short-term resolution to this, because we really need to see how it unfolds, I suppose. But certainly something we need to be paying a lot of attention to from here on, I imagine. Is that how you're approaching it, sort of day by day, looking at it at the moment?
Yes, and it's funny, we just talked about the USD JPY chart Friday because gold was pretty much at all-time highs, and you can't really do technical analysis on the chart when there's no support and there's no resistance. It's just open air ahead. So looking at the USD JPY chart, again, that was in today's article, and it's clearly broken through a trend line, and that suggests, or it doesn't guarantee, but it could be a very good thing for the gold price. Not to mention all the ensuing chaos.
Absolutely. And there are times where the market is very boring. Probably most of the time, there's not that much happening, but this is not one of those times. So this is the time to be paying attention. And like you said, gold, there's a lot more we can discuss on that, but we'll come back to that probably later. But the idea is we do need to be paying attention during this period of time. So appreciate all your work as always, and we'll be checking in with you again soon, because lots to keep watching here. But thank you for your work on that today, Sam.
Thanks, Chris. See you next time.
Yeah, see you next time. Thanks everyone for watching. We'll chat again soon.